Inflation is just like alcoholism. In both cases, when you start drinking or when you start printing too much money, the good effects come first. The bad effects only come later. That's why, in both cases, there's a strong temptation to overdo it, to drink too much and to print too much money. When it comes to the cure, it's the other way around. When you stop drinking or when you stop printing money, the bad effects come first and the good effects only come later. That's why it's so hard to persist with the cure.
Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, look at various time frames. We'll also take a look at the stock market, and we'll compare the Bitcoin bear markets with the US dollar index, the DXY chart, and we'll also take a look at a market cipher and the major green dots going from the daily to the 2-week time frame during Bitcoin bear markets. So if that sounds interesting, stay tuned. Let's get into the charts. So firstly, we're going to start here looking at the stock market. This is the S&P futures chart. And we did just open a new weekly candle here. In the previous video, we were looking for the stock market to try to find some support here on this weekly order block from this red candle in an uptrend. We also had some VPVR support here. This is the amount of volume traded at certain price levels, and when there's more volume in a certain area, these levels can act as support or resistance. So we did wick into this area, and then it did get bought up, quite similar to the Bitcoin action, dumping to 25k and getting bought back up to 30k. And we are still holding this parallel channel, just connecting the two tops here and this bottom, looking for that bounce. So Bitcoin is still following the stock market. Although quite often when we get these big wicks, we do fill out some of that wick in the coming candles. As we can see here on this big wick down, it did get bought up. We ended up quite a lot higher. And then we did end up going down and filling out part of this wick before we got that bounce. Now I want to look at the Bitcoin bear markets here, looking at these candles and compare it to the US dollar index, the DXY, in blue here. I did have a comment in the previous video from Andrew Cameron asking to take a look at this. So we are going to compare the two here, and we do see a bit of a pattern. We notice here in the 2014 bear market for Bitcoin, the US dollar index did bottom out around this area as we started going down, and then the dollar did rise quite significantly as we did finish off the bear market and continue down a lot further. And what we notice is once Bitcoin bottomed out here in the bear market, the DXY also went sideways here rather than continuing this parabolic run. This is on the monthly chart, just so we can squeeze all this information together. And Bitcoin continued the bull run here as the US dollar index went sideways in a range. And when it did break that range and continue dropping, we saw Bitcoin have that blow off top. And then we did see the DXY bottom out here around January of 2018. And this is when the next Bitcoin bear market started. And we see a similar thing. The US dollar index did go up quite significantly here during the Bitcoin bear market. And Bitcoin bottomed out. And the US dollar index went sideways in a range. We had the 2020 stock market crash here. And then we saw the US dollar drop significantly here as Bitcoin started to accelerate into the bull market, And we did see the US dollar index bottom out here around May of 2021. And this was our first top here in Bitcoin. A lot of the indicators point to this being the bull market top, even though we did make a higher high. And a lot of the interest in Bitcoin did leave the space after this big 50% drop here. And then we did see the US dollar index go parabolic again, and Bitcoin did range for a bit here, but has behaved like we've pretty much been in a bear market this whole time. So if we do see a similar thing here, perhaps we'll see a Bitcoin bottom out as the US dollar starts trading sideways in a range, and we start losing this parabolic run. So it is an interesting comparison. We do see similar things in each of these bear markets, and something I will keep an eye on. And now looking at the Bitcoin chart by itself here, this is the 2-week time frame. We do have this golden pocket area, taking it from the bottom of the stock market crash to our peak at 69k. And currently we are still above this golden pocket area. We did wick below it down to that 25k range, and it has been brought back up to almost 30,000 here. And we could say that this drop was exaggerated due to the Terra Luna fiasco, where they did dump up to 80,000 Bitcoin. But regardless, I do think we are still in a bear market, and I think we are going to fill out some of this wick in the coming weeks. But looking at some of these other patterns here, we did have that parallel channel connecting the highs and the lows. And once we did close below that channel, we did have this big drop from 34k down to 25k. I do also have this falling wedge pattern drawn in here, just connecting the tops here and the two bottoms. And this is generally a bullish pattern. And on the third touch, we generally break to the upside. We see two touches on either end, and the third touch would generally break bullish to the upside. But this doesn't mean that we can't spend time here and even go lower before breaking the top of this falling wedge. And this could be an indication that the bottom is in once we do break this falling wedge pattern. I do have some fib levels drawn in here, and this first 382 level here is taking the fib from the 69k high down to the low here at 33k, and we did have this dead cat bounce up to 48k, and this happened to be the 382 level on this bounce from this retracement. And quite often when we get rejected off the 382 level, it is a sign of weakness and a continuation of the current trend. But I've done a similar fib retracement here with this 382 level, taking it from the top of this dead cat bounce at 48k down to the low at 25k. We see that 382 level coming in at around 34.3k. So if we were to do a similar thing as this dead cat bounce, perhaps we see us coming up to this 382 level. But this is just an idea. I don't necessarily think we're going to come up on a dead cat bounce to this level. As mentioned, this is a bullish pattern here, and if we do break this line, then I think the bottom is in. But I do think we have a bit lower to go here for breaking this falling wedge pattern. We could even possibly come up to this 382 level without touching the top of this falling wedge line and come back down and then break the falling wedge pattern bullish. There are a few possibilities there, but this will be a key level I'm watching. And we do have an order block here on the 2-week time frame coming from this red candle in an uptrend. These order blocks are areas of supply and demand. There were buyers and sellers here in a strong uptrend. We spent time here, so there was volume spent here. And these same levels become of interest later on when we interact with them, as there was interest there previously, and these levels can act as support or resistance. So perhaps we do come up and retest this order block and also the bottom of this parallel channel and that 382 level before coming back down one more time and finding the bottom of the bear market. As mentioned in previous videos, looking at the RSI here, we did have this blue box marked out at around a 45 to 46 level. And we mentioned on previous occasions and previous bear markets that once we did break below this level, we quite often saw a 50% drop down to the bottom of the bear market. And I've just marked out the areas where we spent below this line, and reclaiming this level on the 2-week RSI indicated the start of the next bull run. And we also saw that in the 2014 bear market, where we broke below that level on the RSI. We had another 50% drop here, and then we reached the bottom of the bear market. In 2014-15 bear market here, we did spend a year below this level on the RSI, and during the 2018 bear market, we spent about 5 months in this area below the RSI as we bottomed out in the bear market. So currently we can see on the previous 2-week candle, we did close below this area on the RSI. And if we were to spend approximately 5 or 6 months here, would mean we would break back above this area sometime in September or October. But again, it doesn't have to be the same. The first bear market we spent a year, the second bear market was 5 months. So we could possibly spend less time down here. But again, breaking this falling wedge would convince me that the bottom of the bear market is in. We could possibly go lower after breaking the wedge as a retest. We'll have to look at what the other indicators say when that time comes around. And down to the weekly time frame now. Everything is the same as that 2-week chart, that golden pocket, and these 382 levels we talked about on this dead cat bounce. But we've also added in some weekly order blocks in blue here. And what we can see is some confluence here. This yellow rectangle is that 2-week order block, and also this one. But we do see this weekly order block from this green candle in a downtrend lines up with that 382 level and also that 2-week order block. And this is where we got that resistance on the dead cat bounce. And looking a bit further down here, we also see a weekly order block from this green candle in a downtrend. And there isn't really any other weekly order blocks around here, but we do see that weekly order block does line up with the next 2-week order block, and also approximately with that 382 level at 34.1k. So this would be an area I would likely short if we do come up here. And we also see, looking back at the 2018 bear market here, how significant these weekly order blocks were. This weekly order block was the resistance level of this dead cat bounce. This weekly order block here in green was the resistance level on this dead cat bounce. This weekly order block was also the level of resistance on this dead cat bounce, and so on, until we did come down to that 200-week moving average in red here. So there is confluence with the past bear market there, and that's why I think this would be a great area to put in a short. Now we did just open a new weekly candle here. We can see currently it is down from the open. And as mentioned, I think we're going to fill out some of this wick here. This is that golden pocket, these two lines from that overall retracement from the stock market crash to the peak. And we also see the 200-week moving average, which is currently sitting at 22k. We do see that sometime in June, this 200-week moving average will enter this falling wedge pattern. And we could possibly look for Bitcoin to come down and touch that 200-week moving average here. We could go a little bit below it, but this will be a good guide, I think, as to where the bottom of the bear market will be. And again, breaking this falling wedge pattern would indicate to me that the bottom is in, and perhaps we have one more strike down to retest the trend line and maybe put in a possible double bottom pattern, indicating the bottom of the bear market. Pulling up the weekly EMA ribbon now, we do see it's coming down here in line with this trend line. So as this keeps coming down, it will eventually come in line with this weekly order block and around this 382 level, perhaps sometime in the middle of June. Just looking at the absolute bottoms of the previous bear markets, when looking at the weekly RSI here, in 2014, 2015, we got down to around a 28 reading. 2018, 2019, a 28 reading. And currently we're at a 33 reading. So I do think we have a bit more to go in this falling wedge here before we do break the falling wedge on the RSI and on the chart. I also want to take a look at the total crypto market cap here, just to get a different perspective on the overall crypto market as a whole. We can see we topped out at pretty much exactly 3 trillion market cap, and currently we're sitting at 1.27 trillion. And this is also the 200-week moving average, looking at the total market cap. And we also see a spike on the VPVR around this area, around the $1 trillion level. This is also where we did spend some time here in this range. I've just marked that range off with this yellow rectangle. So perhaps we come down a bit further here and spend some time in this area, possibly look for support off that $1 trillion market cap area, and also this 200-week moving average. It is interesting drawing a trend line, just connecting these two tops and also these tops here, that we did wick down pretty much to the bottom of this trend line and get that bounce back up. It's just an interesting trend line. I don't think that's the bottom and we start going up now. I do think we have a bit more to go here. But what's interesting with the total crypto market cap, looking at this consolidation here, this did happen below the bottoming areas here, which is actually different to the Bitcoin chart. And this is because this is the total crypto market cap. And when the alts really take off, it does exaggerate these highs. We saw we went a lot high here compared to this high. And it shows that the altcoins really started taking off here after this consolidation area. Just looking back at the Bitcoin only chart here, we can see that same consolidation area was actually around the lows here when we're at 30 to 40K. So there is a bit of a difference there, but it's just another chart to keep an eye on to help us know when perhaps the bottom might be in. And going down to the daily time frame now, we've got those same 382 levels marked out. The more immediate daily order blocks are significant here, and we did make one on our way down here. We can see we did have this run up going into the end of the week. We did close above this order block, and then we did have a push back down. So we have to see how this daily candle closes. If it can close inside this order block above 30,100 approximately, then perhaps this order block might act as support, and we may push higher towards this next order block, which is at around 32K to 33K. And do also just have a fib retracement drawn here from that 25K low to the top of this bounce at 31.4K. We can see on this pullback so far, we did find support at that 382 level. So if we are able to get a bounce here, that would show strength, as we mentioned, coming only back to the 382 level, shows a stronger continuation in that direction. We'll have to see how this daily candle closes. As mentioned, I do think we will fill out some of this wick. So I do have these other levels here with the 0.5 level at 28.4K and that golden pocket at around 27.5K. Just pulling up the VPVR on this immediate range here. We do see a spike here around 29.5K, and it has acted as support for the time being. Pulling up the daily stochastic RSI now, we can see we have gotten above this 20 level, which is a good sign. We have to wait for this daily candle to close though. We could possibly come back down here, possibly to that 0.5 level or the golden pocket, and put in some bullish divergence if we were to make lower lows on the price action, looking at the bodies of the candles, which the RSI uses. So putting in lower lows on the price action and higher lows on the RSI would be bullish divergence. And perhaps we could look for a bounce then and a possible good long entry. We do have the daily EMA ribbon coming down here. The bottom of this ribbon is at 33.7K. And if we do come up into this ribbon, I would expect a rejection of the bottom of the ribbon. Perhaps we go into it a little bit, but I wouldn't expect us to get above the top of this ribbon, which is currently at 37.5K. And I would look for a short, starting to layer the orders at the bottom of the ribbon, perhaps going up to half of the ribbon and putting the stop loss above the ribbon. And onto the Bitcoin CME futures chart now. I've got that same 382 level marked out here, taking it from the top to the bottom here, and also the same falling wedge pattern. These yellow rectangles are the gaps in the futures market, and we do tend to fill these gaps. This gap here is between 26K and 24K, and we also have one lower down here between 19K and 18.5K. And we do see with this big drop down to 25K, we did start wicking into the gap here. We didn't completely close it, and I do think we will close this gap as we bottom out in the bottom of the bear market. And perhaps we wick down just to close this gap also. If we were to do that and stay in this falling wedge, that might be around the middle of August. What's interesting here is we do have another gap between 35.2K and 34.5K. And we do see that golden pocket area on a retracement from just before we had the big drop to the bottom here. So there is some confluence with that fib and also that 382 fib we were talking about. And this would also be inside that daily EMA ribbon. If we pull it up on the futures chart, we can see it's just starting to enter that area. This is also where that weekly order block is and that 2-week order block. So there is lots of confluence in this area. and I wouldn't be surprised if we came up to close this gap before going lower. And again, this would be a great shorting opportunity. Something that's interesting on the futures chart that isn't present on the spot price chart is we actually have higher lows here on the RSI while making lower lows on the price action. This is bullish divergence, and again, that's not present on the spot price chart, so there is a bit of a difference there. And one last thing, doing that retracement we talked about with that golden pocket in that gap area, we can see currently on this bounce we're getting a bit of resistance at the 382 fib. And if we aren't able to reclaim this 382 fib, as mentioned, it shows a weakness and continuation of the trend. And over to a market cipher now. This is on the 4-hour time frame. These white lines here are that falling wedge pattern that we were looking at on the macro scale. But we do see we got a red dot here. It was confirmed, and we have been coming down since then. Money flow is still deep in the red here. The 6-hour also got a red dot here, and that did get confirmed. And just looking at the 10-hour also here, there was actually a blood diamond here, but it has disappeared for the time being as we wait for this candle to get confirmed. These blood diamonds can indicate a bigger drop coming, and again, they're not 100% perfect, but they are pretty accurate. Have been watching the 12-hour time frame here. We got these green dots here, but this blue wave is starting to curve around, and it looks quite close to a red dot. Again, we have to see that appear and get confirmed first. And now onto the daily time frame. We did get this major green dot, which is more significant than the minor green dots here. These occur when the blue wave crosses this 0 line, and we do bottom out with that green dot. You see we have been moving up slowly here on the daily time frame, but the money flow is still deep in the red, and when that does happen, quite often we can end up coming back down here and making several green dots before we get a bigger bounce. Just looking back at these green dots here, obviously this one was quite a good bounce. This one also was a bounce, although not as significant. But we see when the money flows just started dipping in the red here, that these green dots weren't as reliable, as we do need to see that money flow start curving around, and then the green dots along with that money flow can give us a more probable outcome on a better bounce. Now the 2-day time frame also has a major green dot here, but it won't be confirmed until the close of this daily candle. And again, we did get some major 2-day green dots here, and we didn't quite get the bounce we were looking for. So when we are in a bear market, we do have to look at the more higher term time frames to get a major bottom. And we want to see these green dots build up from the 1-day time frame, then the 2, the 3, the 4, the 5, up to the weekly. And then the 2-week time frame is the one that can indicate the bottom of the bear market. But I will go over all of that in one chart. I have put market cipher on all of those time frames into one chart, so we can see how previous bear markets responded, with these green dots going from the 1-day all the way up to the 2-week time frame. But just to show you quickly the weekly time frame here, as we got a new candle, we see this blue wave still coming down here. It's not looking to close off yet. Looking back at the 2018 bear market, this major weekly green dot did indicate the bottom of the bear market. Although in the 2014-2015 bear market, we got a major weekly green dot here, but we did end up having one more move to the downside, and this second green dot was the one that was the bottom. And that's why I'm looking for the 2-week time frame to confirm the bottom of the bear market. And just to show you that, this is the 2-week time frame, 2014-15 bear market. That 2-week major green dot here was the bottom of the bear market, and also in 2018-2019 indicated the bottom of the bear market. As mentioned in the previous video, this is what I'll be looking for to confirm the bottom of the bear market. And it does look like this blue wave has a bit more to go here, and probably a couple of months longer. So here's the chart I was mentioning. This is all 3 bear markets here. This is the 2014-15 bear market. This is the 2018-19 bear market. And this is our current bear market, taking it from the 69K high. And I've got market Cipher pulled up here on multiple time frames. The top row here going across all bear markets is the 1-day time frame, then the 2-day time frame, the 3-day time frame, 4-day, 5-day, 6-day, 7-day, which is the weekly, and finally the 2-week time frame right at the bottom. And I've cleared out all of the other noise, and I've only just put in the major green dots, not those small green dots, and just to see how they behave during each of these bear markets. We can see on the way down here what we see. We got it on the 1, the 2, the 3, and the 4-day here. We did have a dead cat bounce after that. Then we continued lower. We got these green dots going all the way down to the weekly time frame, and we had that one more drop. And on this occasion, we got the green dots leading up all the way down to the 2-week time frame, which indicated the bottom of the bear market. 2018 looks a bit cleaner here. We got some green dots on the 1 and the 2-day time frame, and these were quite good at getting the dead cat bounces here. And then when we had the final capitulation, we saw the green dots appear on the 1, 2, 3, 4, 5, 6 day, and then the weekly, and finally the 2-week time frame. So we're looking for these to build up. Once the 2-week major green dot is in, it's confirmation for me of the bottom of the bear market. So what have we got currently here? You can see we had green dots here on the 2, 3, and 4-day time frame. It did indicate a dead cat bounce here. And currently we just have the major green dots on the 1-day and the 2-day time frame. So we need to see these build up here. We can't rely on just the 1 or the 2-day time frame to indicate the bottom of the bear market. We do need to see these keep lining up as we do start to bottom out, and we'll know we're getting closer as these do build up. And the 2-week major green dot will give us that confirmation that the bottom of the bear market is in. So we'll keep track of that, as it seems like it may happen sometime before the end of the year. So I think that's about all. There was a lot in that video. I hope you enjoyed that information and analysis. In the immediate short term, we'll have to see how this daily candle closes. We want it to close inside this order block, which is above $30,080. And if it does, then we look for the next daily candle to close above it, above 31K. And if that happens, it will show this order block acted as support. And perhaps we're going to push up to this next order block between 32 and 33K. So I think that's everything. Thanks for watching. I'm Bitcoin Mamo. I'll see you next time. Bye.